Hey, Larry, yesterday, Jamie Dimon said that the consumer is coiled and ready to go, and he cited stimulus payments as a big part of that reason for the stimulus payments we've seen in the United States. We've heard all sort of anecdotal evidence that some of the stimulus money is, in fact, going into the markets. And I realize for BlackRock, you have seen gains, inflows coming in, not just from the United States, but from Asia and Europe and other places. But what can you say about what you've seen with that stimulus money, what impact that might be having on the market right now?
Well, as you know, we do not have that direct relationship. We work with all the financial advisors in the world. And so I would say we, as a business model, we don't go that last mile having that conversation specifically with an individual. But, of course, the wealth management platform of BlackRock's in the United States and worldwide, we're seeing more and more flows. And as evident of monetary M2, the amount of cash that's sitting in the sideline, much of that cash is certainly being put to work. But let's be clear, too, a big reason why there's so much cash sitting in the sideline. During COVID and during remote working, our behaviors have changed dramatically. Think about what the average New Yorker, since we were talking about, we're all in New York, think about the average New Yorker, how much savings they have right now by not commuting. What is it, $400 a month, $500 a month to commute? And that's true in so many cities. So think about that savings that you have just in your patterns of life, how that's changed under COVID. And I think that's a big reason why cash is sitting on the sidelines. I'm very enthusiastic, though, whether the money is coming from a stimulus check or is coming from savings or behavior changes for savings. I think it's fantastic that we're seeing more people either investing for the long term or even trading. If we could get more and more young people to have the enthusiasm to build financial literacy and to not just focus on the tick-tock of the market and trading, but they begin even earlier to save for retirement, save for their long-term outcome. I think the dynamics of America will even be stronger, and the foundation of America will be even stronger if more and more people can be prepared for retirement and then live in retirement with dignity.
Do you think it lasts, though? All of these changes that have led to people having extra cash and then taking that cash and putting it into the markets. I guess I'm asking more of your perspective on the markets and whether you think these highs that we continue to hit are a thing that are going to be with us for a while.
I believe because of monetary stimulus, fiscal stimulus, the cash on the sidelines, earnings, the markets are okay. Markets are going to continue to be stronger. I'm not trying to suggest they're not risks. The greatest risk we have in the world is if a variant if our vaccinations do not help us in a new variant. The key for all our economies worldwide is bringing us back to a normal life, having people come back to office, having us going to sporting events and cultural events and traveling again and business meetings. If we don't have great success in the vaccination and developing herd immunity, then I would say that's probably the greatest risk we have in the world.
Shepard Smith here. Thanks for watching CNBC on YouTube.